Good morning and happy Thursday. Welcome, YouTube family. I was gone yesterday morning. I couldn't do a podcast, so we're going to bring you up to speed today. At a doctor's appointment. I will bring you up to speed on all that fun when I can. Next week, sometimes life just throws you a little curveball, right? So anyway, wow. Remember how I was looking at my 7-day moving average and I saw that the green line was moving above the yellow line? That has changed. It's just, we're right back to the same old numbers. They're just 4,203 homes came on the market and 4,215 went under contract. So that dashes any hope that listings are going to exceed number of contracts. We have 4,240 homes on the market this morning. As you are awash with all of the chatter of going to be a crash, not going to be a crash, those are the numbers that matter right there. It's funny, I was talking to a neighbor the other day who has a friend who's an investor that's always been right, that was trying to tell me that the banks have been already setting up forbearance homes to be ready so that this summer they can foreclose on them in 5 days. Hardly. You have to get a foreclosure notice and there's a process and you can't just have everything all lined up, pull the trigger. So he's going to wait until this summer and he's going to buy the dip. That sounds like stock market trading to me. Some interesting stuff here. Let me figure out where I want to start here for just a second. Let's talk about what the real problem and challenge is right now. And that is this, and that is that in this one zip code, which is typical of most of the zip codes that are out there, this one's in Ahwatukee, and they've got in the price range, well, they're averaging about 66 to 68% of the homes going above list price. And you get down here and you look, and between 300 and 400,000, they're at 17,800. The aggressive ones are between 600 and 700,000. They're going over by $38,143 on average. Now, that tells you that there's some real challenges when it comes to offering home prices above list. So I want to talk a little bit about that for a second, then share some tips. Second, right as I was about to tell you, reconnection successful. Isn't this software fun? Is it disconnecting again? You're not receiving enough video to maintain streaming. As such, viewers will experience buffering. Wow, haven't run into that problem before. Well, we'll see what happens, folks. I'll just keep going. A lot of houses, as you know, going above list price, and what people are doing is they're waiving the appraisals, and I'm going to talk about what that means. And they're asking, buyers are now asking for leaseback. They want more flexibility. So I saw one this morning where the sellers are saying that they're requesting a 60-day leaseback while they wait for their new construction home to be finished. So that's a challenge for you as a buyer. You're buying and you want to move, but then you got to rent it back to them for a couple months. But you know, the sellers are in the driver's seat right now, so that's just the way it goes. If we look here, and this article is by MarketWatch, said if a home buyer waives the appraisal contingency and the assessment comes in low, they could be forced to dip into their down payment to cover the difference. So if you got a 20% down payment and your appraisal comes in 10% below it, now you got a 10% down payment. So it'll eat in to your down payment. If you are doing a minimum down payment and then you have a bid over the house and the appraisal doesn't come in where it needs to be, you've got to show up with more cash at the table. So make sure that you and your lender and your agent are very clear on what it means to waive a contingency. Now, how can buyers sweeten the deal? I thought this was great advice. So offering them flexible timeline, allowing them to rent back, the lease back, that's very good. That works very well for sellers. And we've also seen some buyers offering to pay a portion of the seller's closing costs and taxes or releasing the earnest money deposit early. So try to be a little bit creative. You know, maybe you don't want to bid way high. Maybe you want to come in and say, hey, I tell you what, I'll pick up all your closing costs and I'll make my earnest money hard right after the inspection period. And I'll even pay your taxes that you owed. So there's a lot of different ways to skin a cat, so they say. Now, some interesting things going on here. Before I get to the Google search, Zillow has upped their game on 3D tours. It used to be that you could only do the 3D tours on Zillow with their Zillow app using your phone. Now they have partnered with a couple of cameras, one of them just being the Theta, which is, let's see if I can pull it up here. It's this one right here. And so these are the 360 cameras, but it's great to see that now you can share it. So I pulled up this home here as an example, and this is done with, this wouldn't be done with a phone. You can tell there's a big difference there. So you can cruise around and go to the dining room. So this one is probably done with the Theta 360 cameras. Those are great cameras, but it lets you walk through the home. And more importantly, Zillow is now letting you share that link on the MLS, where before it was just integrated into the Zillow webpage and you couldn't do anything else with it. So I'm glad to see that. Glad to see that that has showed up. Another interesting trend that I saw that's coming up, and this one I was kind of curious about this. I wasn't sure if people were going to be doing this or not, but get this. New commercial real estate trend accelerated by COVID. In other words, some of the empty commercial properties are being converted into housing. Interesting. I wonder what that's going to end up looking like. So when you're going by and you're driving by some of these strip malls that have all these empty buildings, you might start seeing some conversions there. But the challenge again is that there's a survey that came out that said that 30% of businesses are thinking of calling their people back to the office. So don't get too cozy at home. They're talking about bringing you back. Now, here's the deal. This is interesting right here. When is the housing market going to crash? Is a red hot search on Google. Searching that phrase, Google reported last week that the search, when is the housing market going to crash, had spiked 2,450% in the past month. People are waiting for the market to crash. At the start of this month, 42% of homes are selling for more than their list price. And according to the CoreLogic people and people from Redfin, they kind of end this article saying that as mortgage rates rise, which they're slowly doing now, and buyers hit an affordability wall, he expects to see annual home price gains nationally cool to the 3% range, but all real estate is local. That does not mean that there will be some markets that are not going to have any price growth at all. I do think we're likely to see the markets correct. But they're saying if prices climb or even drop slightly in some markets, it will not lead to a foreclosure crisis. Investors are quite heavy in the market as well, given the high demand for rentals. They should serve as a backdrop for major declines. So we've been saying this, that there's so much investor demand out there that if new inventory starts to show up, they're going to gobble them up. All of this translates again to you're not going to see price declines until you see an increase in listings. And listings are going up ever so slightly, and they're just not showing up in the market. And it's not getting any better. I hate to be the bearer of bad news, but let me show you where we're at today. My mouse is giving me fits here. So let's see, here's where we're at. I'm going to zoom in and view this at 200%. Don't you like it when you get on a live stream, you just watch a guy just tooling around with his mouse? Here we go, I'm ready. There it is. So I had some optimism here in this blue line. That was listings outpacing homes under contract. That quickly got erased. Now they're all at par. Boom, boom, boom. 4,000 on, 4,000 off. No difference at all. Here, we were actually adding about 315 homes per week in inventory, and that just went away, just like a little blip in the radar screen. So it's interesting, though, that people are searching and asking the question about market crashes. I guarantee you nobody did that in 2007. In 2007, everybody had fear of missing out. They wanted to buy a home. They had to. So they didn't buy a home now. They'd never get to buy a home. There were no searching for housing crash. A bubble, before it bursts, has everybody wanting to jump in. And then things go to hell in the handbasket. Whether you're talking tulips, you're talking the dot-com crash, tulips in the 1600s for those of you history buffs, or you're talking real estate. When the consumers Googling the crash, they're not Googling saying, how do I buy a house? They're sitting back and they're waiting. And they're waiting for something to happen. In the meanwhile, people are out there buying homes and they're being left out. So it's a interesting trend. And that headline caught my attention. Now, tomorrow, Pat and I are going to talk about what's called a cross-collateral loan. This is a product that if you're, unfortunately, it's only in Arizona, but they're going to expand it. This will be important and a good tool for you if you don't want to sell your house because you haven't found your house yet. This allows you to be already financed to go get that house, then come back and sell your current home. And it's a very interesting product. It's quite attractive. And I think it could solve a lot of problems for you if you're thinking, I don't want to sell my home right now because I don't know what I can get. Unfortunately, it's just Arizona to Arizona. So that means that you can't use this loan to come from Seattle. Although they say that that's probably coming soon because it's from Washington Mutual Bank. So what you'd be able to do is say, I can now go down and get my Arizona home. I can come back and sell my Seattle home, and I can do it with one loan, and then it gets repackaged afterwards. So that wasn't available now, but we're hoping that that's coming very soon. But it is available for those of you in Arizona. So tune in tomorrow at 3 o'clock because that's when we're going to be explaining that in great detail. In the meantime, everybody have a great Thursday and take on the rest of the week.